Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, June 28th, 2023. Before I click through all the charts, just want to encourage you to please click like, please subscribe to our channel, please share the content with friends and colleagues, and please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, just like the Apple report, daily analysis in the Triple Q and the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% swings as a minimum on our underlying stocks. And so check out wickedstocks.com. So here we are. Let's walk through the charts. We had a buy signal about 5 weeks ago or so when we settled the week above this 197.24 descending 18-month channel top that set off a long-term buy signal, ultimately anticipating a retest over the coming, well, the timing of that is next to impossible. I'll say over the next full year or less. How's that? The 414.49 all-time high from late 21. But along the way, as anticipated, we've been snagged at 277.69. This rising channel top was considered a 2 to 3 month objective above 197.24, and I'd mentioned at the time we might see it within 3 to 5 weeks, which is obviously what has occurred, and we've backed off. And just FYI, as you're probably well aware, once we test the 277.69 channel top, you should allow for bearish rotation back to the 182.21 rising channel bottom, which over the next month or so will converge entirely with this former descending channel top at 197.24. So holding below 277.69, you should allow over the next couple of months for 182.21. There's no clear-cut sell signal for anticipating that. It's just the way channel dynamics typically work. There's plenty of time for the market to fall back into the 180s, 190s over the next couple of months and then resume its upward course as we move into later year. Now, of course, if we were to settle above 277.69 at the end of this week or any week, this rising formation, then yes, I think within probably 3 to 5 months, we could actually reach that 414.49 all-time high. But we've got to close above 277.69 first. Now for the day. Where to begin? I want to start with this mid-band structure, and I'm also going to add the rising one-third speed line. The 246.72 is the rising speed line that we actually did settle below on Monday by a hair, came roaring back on Tuesday. Not only did we come roaring back, but late in the day, we eked out a settlement above the mid-band structures that are 247.71 to 249.48. I don't have 249.48 as a minor point today. I just threw in Tuesday's high, which I think has a bit of a pivot point quality to it itself anyway. But we really don't need a pivot point today. I do think that holding above 246.72 to 247.71, which is the lower mid-band, and the rising speed line at 246.72, that is our, I hate to use the word base of support because we are right there really, but assuming we open at or above 247.71, this is still an area that can contain selling through the rest of the week. And yes, above which we can over the next, well, the timing of that, I'm going to actually use this chart. If we continue closing, if we close higher today, we move out of here, I think you can imagine that by the end of next week or sooner, we can retest this 277.52 channel top. So that is really the bottom line to what I'm trying to say, which is continued daily settlements above 246.72, and you should anticipate a retest of 277.52 by the end of next week. That is a 3 to 5 day swing trade. That is the 1 to 2 week position trade. And, we did close just above it. So obviously it wouldn't take much for the market to ease back and open below 46.72 today, which would present weakness out of the gate. So we are right here. This is a meaningful pivot area. If you're still short from Monday, you don't have a strong argument from me, but I do think you want to find a way to finagle your way out of that short position. I do think holding above 247.71 today, you should expect 258.12, which will put us just right about here. There are a few things going on there that may well contain buying through the rest of the day. But if we push through 258.12 today, we can run up to 267.06 by the closing bell. And 267.06 is, once again, nothing more than this long-term blue line, this descending two-thirds speed line projected off the all-time high that can contain daily buying pressures. Last thing I'll say to the upside is if we close today above 267.06, we may well, and I think probably would by Friday's close, retest 277.52, which, as I've been saying in this video, is really a 3 to 5 day target anyway, or by the end of next week. I guess you could call that a 5 to 7 day target above the, let's just call it the upper 240s. I've got 246.72 to 247.71, assuming we pull away from this today. That lends credibility to this sort of sell signal rejection, buy signal in effect, up to 277.52, where if you're long following this development on Tuesday's close, if you're long, profits can be taken at 277.52 and a short trade entered, anticipating perhaps the market falling back to the, where are you? There it is, 223.83. This is still sort of the 2 to 3 week target, our 2 to 3 week dynamic. We do have a short-term buy signal, once again, above 246.72, and by that I mean 3 to 5 days, up to the 277.52 formation, where we could top out and within 2 to 3 weeks fall to 223.83. Inversely, we could close today below 246.72, in which case I'm back to anticipating 223.83 within 3 to 5 days. This is sort of the early rejection stage. I'm not sure, obviously, exactly where this is going directionally as we move into later week, but odds favor upside following the settlement Tuesday back above these line studies. And assuming we continue closing above them, yes, 277.52 in reach by the end of next week. And once again, closing below 246.72, 223.83 likely over the next 3 to 5 days. And this speed line, once again, able to contain selling on a weekly, possibly through July basis. We could bottom out here, rally back into the 270s, 280s, and fall off again. And that's why I give it, as I say in the beginning, a full 2 months to realize the possibility of this 182.21 rising channel bottom. And if we were to close soon, like over the next week, by the end of next week, below 222, 223.83, then yes, I think we're likely to test this channel bottom within another 2 to 3 weeks. So it's like that. I'm trying to think if there's anything else to finesse. I will say, and this is probably the last thing I will say, and where are you? That if we break or open today below 246.72, I think you should expect at least 240.70. That is the low over the last couple of days. And if we break 40.70, 235.23. You should allow for 235.23 intraday if we open clearly below 46.72. I think that's the intraday target. Until then, the day trade remains bullish up to 258.12, where profits can be taken. A short might be set. If we push through 258.12, I'd recommend reversing, covering that short position, going long. I'm talking to day traders now, up to 267.06. Inversely, once again, breaking or opening below 246.72, expect at least 240.70, and I think more than likely a closing of this gap at 235.23. That may be it for the day, but if we cannot bounce out of here in a meaningful way, we are setting up once again for testing this rising 1/3 speed line within another several days, where we could bottom out through next week, possibly through July activity. I think that pretty much rounds it out for Wednesday's Tesla report. I'll be back tomorrow with Thursdays. Please click like, subscribe, share the content, and last but not least, check out wickedstocks.com. You have a great day.